Okie dokie. Good morning, everybody, and welcome to this week's Talk Forex. I hope you've all had a wonderful week in the markets last week and that you've all are having a lovely long weekend for most of you in Europe, and I think also possibly the US. I'd like to start off by apologizing for the fact that my voice is a little bit husky this morning. I'm losing my voice apparently today, but I'll try my best to make sure you can all hear me. I just won't be able to scream into the microphone. So what we're going to do today, as always, we're going to go through all of the different FX pairs, and we're going to try and identify opportunities to trade for the coming week. We'll try and find opportunities that are of the highest probability, and means that they're going to give us the best chance of making some money in the markets. But before we go into that, I need to remind you all that it's not trading or investment advice. So everybody, once we go through these, if we identify opportunities, which we will, you still then need to go away and take a look at the charts for yourself and decide whether or not the opportunity is right for yourself. Because obviously trading carries a very, very high level of risk, and everybody needs to ensure that, from a personal perspective, the opportunities are correct for them. Make sense? Okay, so let's start off. Let's first of all move these up here and put them into an order. So let's start off by looking at the Aussie Cad. Now, over the past few weeks, we've actually kind of been trading this both ways. So a couple of weeks ago, we were buying this when it was around here. And then more recently, we started selling it over here, and then sold it over here again and took some profit. So the Aussie Cad has made us some very nice money over the last couple of weeks. As we can see, it has been rallying over the past day or so. So after that sell-off over there from this level to this level, the market has now rallied off. So now we need to decide for ourselves, what is the correct direction to take a trade? Looking at the chart here, if we zoom into, well, first of all, let's take a look at the daily chart. At the daily chart, you can see that we're coming up to a very, very significant structure level. It's this one over here. If I'm zooming in there. Okay, and it's at 1.0331. So it's very, very significant structure level. And what we don't want to do is we don't want to get caught the wrong side of a trade around this level here, because this level has the opportunity, it has a possibility to basically really give us a momentum move, particularly if we get a breakout. So what you wouldn't want to be doing with this trade here is you wouldn't want to be selling up here, because ultimately it's just bad news and you probably will end up losing your money. By the same token, we don't want to be buying there, because we know that when we come to these sorts of levels, they are potential reversal levels. It is a big level, and we wouldn't be at all surprised if the market gives us some sort of at least a short-term reversal at this level and pulls down to the 1.0250s type area. So what we want to see, all right, is we would want to see the market pull up through this level. Let me zoom in now to the 4-hour chart. We would like to see the market rally on up here, okay? We would like to see it rally through this area over here at the 1.0370, around that area there. And then we would like to see it pull back to this area here at the 1.0257. All right, so we want to see that. We want to see it rally on up through this level here, prove that it's got some momentum there, and then give us a little bit of a pullback. All right, but what we don't want to see is the market sell back through this level with the same sort of momentum as it was bought through, because if it does that, it shows us that we've got a reversal on our hands, and actually we need to be looking for selling opportunities. At the moment, it's a very, very bullish chart, so we want to be buying dips, which means as I said, but we want to see at the same time that this level is going to be broken. So it's a bit of a tricky opportunity here, and there will be other opportunities that will be more clear-cut than this, but in any case. Okay, so once it go through there and then pull back to this area here, that's where we'll be looking to become buyers. Okay, so that's that for the Aussie Cad. Then if we move on to the Aussie Franc, This one again is one where we've been long and short this pair over the past couple of weeks. And that's one of the fantastic things about trading the way that we do. Because we're not looking for massive price moves, because we're looking for just small reactions to major levels, we are able to trade in both directions, and we're able to be profitable in both directions. Okay, so even though it's nice to be trading in the direction of the trend, and that's ultimately what we look for, all right, in every trade that we take, if we see that the market's gone a very, very long way in a very, very short space of time, then that gives us an opportunity to trade the reversal. And because of the way that we enter into our trades, we're able to mitigate some of the risk and get into, you know, a low risk, high probability trade scenario. Or if I give you some of the sort of statistics for this system, you wouldn't actually believe it. It would be unbelievable. So for example, of all of the trades, of all of the positions and trade ideas that we have, and are you ready for this? All of the positions and trade ideas that we have, trading this sort of, this strategy, this approach that we're showing you here, only just under 3% of them lose us money. Now, don't get me wrong, that doesn't mean that 97% make us money, but we have a way of entering into the markets where we're able to ensure that we're on a losing position only 3% of the time. It does mean that our risk reward is a little bit skewed, so we don't have a positive risk reward, but we have a positive account balance. Okay, but what I'll do is I'll talk about that in another webinar. What we'll be doing in a couple of weeks' time is an educational webinar, and I'll talk a little bit about our entry technique there. Okay, so we have a very, very positive not risk reward, outcome of our trades, positive strike rate. All right, anyway, going back to the Aussie franc. So we've been trading in both directions here. Currently, we want to be trading to the upside. Now, what I wanted from this trade right here is I wanted it to pull back somewhat to sort of around this level here at the 0.7386 area, because I can see, well, first of all, looking at the daily chart, we can see that it is in an uptrend. It's an untidy one, but that's not a problem for us. It's, if the market's range bound, that's not an issue, because, as I said, we're looking for short-term reactions to levels. So we don't need the market to push off in one massive direction. Okay, we don't need a huge trend for us to be able to make money. Consolidation is fine too. The only time when we kind of get ourselves in a little bit of a pickle is if we completely get the direction wrong, and that's where we will end up taking some sort of a loss. All right, now with this trade here, what do we want to do? Well, currently, if we take a look at this, the market is bouncing off of this trend line. So the market's come up here, it's come down, it's respected the trend line, it's bounced from it, it's rallied on up towards the highs there, it's now pulled back. And one of the things I like about this pullback is it's actually sort of not really looked back at all. It's almost moved in one direction. Okay, and these were opportunities to sell down here, but now we're at this level. I see this as a sort of bargain. Now we're at this level, I want to start to become a buyer, but I have to become a buyer at the right place. And I said that I was a little bit disappointed just now. And that's because I want the market to come down here to the 0.7388 level. Unfortunately, it looks like the market's probably not going to do that, and it's going to rally on up here, which means we're going to miss this trade, but c'est la vie. What can you do? You are going to miss trades. That's just part of being a trader, and that's what you have to learn to get used to. So if some of you guys are out there are new to this, unfortunately, we are going to see opportunities that are otherwise good opportunities, but we just don't get to our entry level. So therefore, we've just got to see it right off into the sunset and, you know, dream about all of the profits that could have made us. But as professional traders, we don't care, because we know that there are always other opportunities out there. However, coming back to this, if we can see that if the market does come back to this level before breaking through this area around here, okay, so before breaking through this resistance area at the 0.7476, if it can pull back here, then we will be looking to buy the markets, okay, and our profit target will be at the 0.7476. So we'll be looking to buy at 0.7388, and we'll be looking for roughly 90 pips on this trade if we get to that area there. But at the moment, it's looking a little bit bleak. It looks like it's a trade that's going to hit our profit target without us, which is a little bit frustrating, but what can you do, c'est la vie. Now, looking at the Aussie Yen, now the yen pairs have all gone a very, very long way in a very short space of time. Okay, we had this massive sell-off here, and we said a couple of weeks ago that we're going to look to start selling these. Even though with the dollar yen, when it's getting down to extreme levels, we want to become a buyer. Generally across the board, with the other yen pairs, we want to be selling because we can see that we've got a big trend here. We can see that it's gone from up here to down here without really looking back at all. And it's unlikely that the market is going to kind of go all the way down, then all the way back up. All right, we're not looking for the market to break through these lows here. I don't care whether this trend continues or whether we have a reversal here. I'm just looking for an opportunity to sell the market. All right, and we've actually had an order in here, all right, which we've executed up at this level where we are now short. Okay, it's not gone for us at the moment. It kind of came towards our profit target. But the great thing is that if we weren't in this trade, we would have another opportunity to sell here at 83.77. So we'd be selling up here, looking for the market to come down to 82.55. If it doesn't do that and it pulls up to this level at the 85.03, then I'll be looking to sell the market again, because ultimately the markets never go in one straight line. Okay, and there's been no fundamental catalyst there to make me want to step aside from this trade right now. So if we're only ever talking technicals and there's not some sort of massive fundamental factor pulling us away from a trade, then we're quite happy to be trading between these levels here. So waiting for the market to come back to 85.03, where we'll be looking to sell it, and then we would sell it down to 83.79. That's where we would take our profit. Okay. Aussie New Zealand. Now, we bought this a couple of weeks ago, and I think we talked about it here. We bought this pair when it was pulling back, because if we take a look at this, we zoom out a little bit, we can see the market went quite a long way. It's gone all the way from down here at 1.0367 all the way up towards these highs here at 1.1020. And it went there in a very short space of time without really so much of a pullback. Then the market eventually started to do a little bit of profit taking, and we wanted to look for an opportunity to get involved in this trade again, because our belief is that all of these buyers over here, and this is important, you have to put yourself in the minds of the big players, of the people that have made money. And you've got to think about all of these guys over here that were making money. Are they just going to give up on this trade? They've seen it go 700 pips. All right, in a month, in 6 weeks, less than 6 weeks, 700 pips. When the market starts pulling back to this area here, okay, so they took profit up at around the 1.1000 level. So when they see the market down at 1.0750, 250 pips lower than where they took profits, do you think that they're going to try and get involved again and try and push the market up again? Absolutely, because what even if they were to get in here, okay, and the market were to drop down to this level, at the major level at 1.0615, they've still got themselves a net profit from the trade that they've taken down from 1.03 all the way up to 1.10. So 700 pips there. All right, and if they were to get involved in a trade down here, there's 200 pips off the high. They could risk 100 pips to see if the market's going to push up. It's a decent sort of level, so it's a previous level of resistance which becomes support. All right, of course they're going to do that. That's where they're going to get involved in the trade. And you as a retail trader, that's how you need to start to program your mind. That's how you need to start to think. Because if you can put yourselves in the minds of the traders that are making money, you too will be able to make money, because you'll understand what their movements are. You'll understand what it is that motivates them. Does that make sense to everybody? Just type a yes or a no into the chat box, just so I know everybody's alive and with me. Okay, so going back to this trade here, last week or a couple of weeks ago, we wanted to start buying this. We were buying from the 1.0750. We then took profit last week, which was lovely. The market broke through this level here and it's gone on to make more money, but we aren't involved in the trade. We don't care about that because we hit our profit target and that's how we build our accounts. Now, what do we want to do? Well, we still want to be buying this market. What we would potentially like is either for the market to drop back down to the 1.0750 again, so around this area here where we will become buyers again, or for the market to first of all break through the 1.0965 level, so break through this level, come up to some sort of around the center of this zone here at the 1.1025, and then pull back to 1.0870, and then we'll be happy to be buyers here. What we can't do is we can't wait for the markets to come down to this area here right now, because we need to see more of a move in that direction to convince us that the up move is taking place. Now, we've got a lot of news coming out this week, so that's one thing, not just for this, but for every single one of the pairs that we're looking at. We need to keep that in mind, okay? It's the NFP's week this week, so we've got a lot of economic data coming out. We've got the ISM from the US, we've got the manufacturing, the services, and the construction PMI coming out of the UK. These are all things that we need to pay attention to, and these, usually when you look at the news, it's kind of short-term volatility. So if you just look at things like the retail sales, for example, even the non-farm payrolls, they aren't going to be big game changers because they're not forward-looking in nature. All of these economic releases, they are reporting on what's taken place in the past. All right, but what's special about the week that we're in right now, this first week of the month, is that we actually have reports which are forward-looking in nature. So they will be leading the markets by 3 to 6 months. And this is what professional traders do that retail traders don't. Retail traders, they'll look at the non-farm payrolls, and they won't understand that it's reporting on the past. So they won't just be looking for the short-term volatility. They'll sit there and they'll think, oh my goodness, it's a massively positive number or a massively negative number. This is going to be a long-term, game changer. The markets are going to turn around from here and move in a different direction. That's not going to take place with economic news that reports on the past, which a lot of it is. However, if you start looking for survey-based data, so things like the ISMs, okay, the consumer confidence type releases, the IFO business climate, or if you look at these survey-based releases, they're the ones that are truly forward-looking, and they're the ones that the professional traders in the banks, so in your Goldman Sachs, in your JP Morgans, your Deutsche Banks, they are the reports that the traders that will be looking at and trying to position themselves for the future. And that's what we have coming up this week. So we need to be a little bit careful when we're getting involved in the markets this week, because literally almost every single day we have a big economic announcement. And as I said, this week we've got the ISM, so it's going to be very, very interesting because that's going to shape our views, particularly on the US dollar for the coming months, okay? So that's a little side note when we're looking to get involved in that trade. And I can hear what some of you are shouting on the screen there. You're saying, okay, so we've got all of these news announcements out. So then what do we do? How do we play this? If we're talking about these trades and these opportunities that you want to get involved in, but then at the same time, you're saying to be careful because we've got these economic announcements that could potentially change the trends of the markets. What do we do? Well, the first thing is, if you're going to get involved in a trade that the economic release is going to impact that particular currency pair, you don't want to do it directly before the announcement, okay? I would say if you're getting involved the day before, that's okay, because you're giving the trade a little bit of time to be able to move in your direction, where you could perhaps move the stop up to break even, or maybe even take profits and come out of the trade before the release takes place. However, if it's, let's say, the morning of the trade, okay, so let's say all of the economic announcement. So, for example, we've got the Canadian employment numbers coming out on Friday morning European time. What were you going to, or Friday afternoon European time, Friday morning US time? What are you going to do? You would, and you're sat there on Friday morning, you would decide that you're not going to get involved in that trade because it's just a little bit too close to the announcement. However, if the trade presented itself on Thursday morning, so 24 hours before that, then you would take the trade because you would have an entire day and a little bit for the trade to be able to move against you. Now, yes, there are going to be some trades that to move with you. There are going to be some trades that move against you. And if they do, then that's just life. That's trading. You're going to take a little bit of a loss, but at least you're giving yourself a little bit of time for the market to move in your direction before the economic announcement comes out. Does that make sense to everybody? Okay. So that's the Aussie New Zealand. We're looking to buy that at some point. What about the Aussie dollar? Well, this lovely, disgustingly sideways moving looking type of chart here. What do we want to do? We think in the long term, from a fundamental perspective, we can see that there could be some more downside here. But what do we want to do right now? Looking at the price action, the market has reacted to this previous level of resistance over here. So it's been resistance once, twice, 3 times, 4 times, 5 times. The market eventually sold away from that. It then broke through this structure level over here, all right, at the 0.7492 area. And it broke below here down towards the 0.7433. So what do we want to do with this pair? Well, it's been quite range bound. We think that ultimately it's going to go lower in the short to mid-term. So we want to be looking for selling opportunities. We'll mosey on along to our 4-hour chart, and we'll look to see where that opportunity would be of the highest probability. And we think that will be over here at the 0.7609 area. So we can see the market is ebbing and flowing, which is what the markets do. They never ever move in one direction unless, I say never ever, sometimes they will. If the Swiss National Bank, for example, decides to get involved in the markets and remove the floor underneath the euro, which it did a couple of years ago, then you saw it move in one direction. But even then, you can see that the market has recovered somewhat from there. Okay, so even going back to that particular moment in time when it was a bit of a catastrophe for a lot of traders out there that were over leveraged, even then it still pulled back somewhat. Okay, so with the Aussie dollar, we want to be selling this market. Where do we want to sell it? Well, we can see that it's moving down here. We want to be selling it from around the 0.7609 area. Where do we want it to go? Well, this is the fantastic news about this approach. We don't need the market to prove us right in our overall theory on where we think this particular pair is going to go. We don't need to be proved right there. We just need a little bit of a reaction to this level. So we just need the market to come up to this level here and then move down to this level at the 0.7510 area. If we can do that, then we will make money. It's really, really as simple as that. We don't need a massive trend continuation, which is the good news. All right. So you don't need to be right very big. You just need to be right in this instance. All right. Moving on to the CAD Franc. Let us go to the daily charts to get a bit of context. Now, you notice, for those of you that aren't just sat there writing notes on every sort of single trade that I'm going to take just for ideas and then going back to your trading screen to then deciding whether or not it's right for yourself. For those of you that aren't doing that, and for those of you that are trying to take notes and understand the way it is that I go about looking at the markets, which I really urge all of you to do, because that is the purpose of these sessions here. The purpose is that every single one of you, you don't just look at the opportunities and the ideas that we're talking about, but you look at how I go about analyzing the markets and how I come up with those ideas. And so for those of you that have been paying attention, you would have noticed that I always start by looking at the longer term charts. I look at the daily charts. Now, I don't necessarily trade in the direction of the daily trend. As I said, sometimes when the market goes a very, very long way without pulling back, then I'll move in the opposite direction. But at least I need to understand where the market is. Okay, we need to understand generally which way the market's going. What's the sentiment of the market? And then we can decide how we want to trade. So with this one here, I see 2 opportunities. We can see that the market has gone from 0.7604 down to 0.7247 in a relatively short space of time. It hasn't so much as pulled back one little bit so far, and that's abnormal for the markets. If we go back, you can see that wherever the market goes, it ebbs and flows. So it goes from one level to the next, from one level to the next, from this level to the next, and up here and down. Okay. That level down there to this level. So it kind of ebbs and flows. Even there, we had this massive reaction there. The market pulls back, and then what happens? It then pulls back to this area here. So it doesn't generally move in one direction without pulling back. So we can see that the market over here rallied through a few levels, and then it started to pull back. So what do we want to do? Well, we're looking at this opportunity here. Okay. We think that we want to be sellers. So to be sellers, we need to wait for the market to pull back to this area over here at the 0.7415. But doesn't that present us with an opportunity? If we think the market is going to move back to this area here, don't you think that presents us with an opportunity to become a buyer at some point? Because ultimately, we know that the market is going to do some profit taking at some point in time. The answer is yes. Of course we do. So we could wait for the market to come down to, let's say, the 0.7217 area. If it comes down to this low over here, that would be an opportunity for us to start buying the markets. Now, if we want to start going against the trend, one of the things that we have to understand, let's move out to the daily for this. One of the things we need to understand is, what is our risk? And the biggest risk to going against the trend is getting involved in trades at extreme levels, at key levels. Why is that? So we don't want to be going against the trend at key levels, because that's where we're going to have a lot of stop orders. We're going to have a lot of trend traders with their entry orders at those levels. So that's where you can potentially get even more momentum and the market go even further against you. Then you're just trying to stand in front of a trade. But that's not what's happening here. The extreme level is this one down here at the 0.7061 area. That's the extreme level here. So I, from my personal perspective, see an opportunity to buy the market if it comes down to this area here at the 0.7216 level. If it comes down to here, I'm going to start to buy the market, because I believe at some point the market is going to pull back. At some point it's going to pull back at least to this area here. Now remember, with this trading system, we're not looking for anything magical to happen. So I don't need, if I start buying here, I don't need the market to come up here to the 0.7604 area for me to be able to make money. I don't need a massive move in the market like that. Okay? I just need the market to move from here to here. It's a little bit of profit taking, just what the markets normally do. So I'm not trying to predict the overall direction. What we're doing with this particular trading strategy is we're taking advantage of the short-term volatility in the markets that take place regardless of the direction of the trend. You're always going to have pullbacks, and then you're always going to have continuations. It's just the way the markets work. So when the market comes down here, if it does, before pulling back to this area over here, which is where we would want to become a seller, by the way. So if the market comes down here first, I will start to become a buyer in anticipation of the market pulling back to this area, to the 0.7310. Now, if you think, well, that's a bit of a dangerous strategy, why would you do that? In a minute, I'm about to pull up a chart that will prove that this sort of trading, it does make sense, because I'm going to pull up a chart where the markets have been moving in one direction. Okay, and then we became, let me get rid of that. Sorry about that. I'm just way too popular this morning. I'm going to pull up a chart there where that exact thing has taken place. The market's moved very, very aggressively in a particular direction. And now it started to pull back. Now, no normal person would be looking to buy where we were buying last week, and actually we made some money off of it. Okay, so going back to this trade here, if it comes down to 0.7215, I will become a buyer. And I'll be looking to take profit at 0.7310. If the market then pulls back, okay, and this is going to be the super high probability trade. If it then pulls back to the 0.7415, I will then become a seller. I will move it down to this area here at 0.7311. That's what I'm going to do with this particular pair here. Now, Let's quickly pull up a chart, not on this one, where up until the other week, you would have thought, oh my goodness, this chart is not going to pull back. It's just moving in one direction. And that's this one here. Look at this move right here. Okay, so we've got the market has been moving very, very aggressively. The Franc Yen through levels, not so much of a pullback. And what we started to do the other week is we started to buy around this area here because we thought, you know what, it's gone a very, very long way in a very short space of time. Then we looked at the structure levels and we saw that the main structure level was this one over here. So the momentum move had already taken place. It was this one over here. So we started to buy the market there, where ordinarily people would say, and conventional wisdom would say, well, you're stepping in front of a train. You're going against the trend, so you're going to lose money. But we understand that the markets always have bouts of profit taking. Human nature, we put ourselves inside the minds of the traders that have made money. Now, if you had made money in this move over here, if you had sold from this area over here down to this area over here, do you not think at this point in time, you're going to be sat there thinking, even if you haven't changed your direction on where you think the market's going to go, do you not think that in your mind, you'll be sat there thinking, I've made quite a lot of profit now. It's moved in one particular direction. I understand that the markets ebb and flow. So I'm going to do a little bit of profit taking. I'm going to take a little bit off the table here. Now, if you were selling with this market over here and you need to close at least part of your position, what do you need to do to close it? You need to become a buyer of the market because you've been selling. To get out, you need to buy. And if you buy, what happens? That then starts to push the markets up a little bit, correct? So you can become a buyer at extreme, or you can become a contrarian and trade against the trend. And in this case, we can become a buyer at extreme levels and know that there's actually not as much risk as most traders would perceive. Okay, most retail traders make the totally opposite mistake here. Most retail traders have seen this big move. They're sitting there thinking, well, I'm just going to wait for a little bit more confirmation. And then the market moves a little bit further in their favor. And they're thinking, oh, I've got this confirmation. The market's definitely moving in my favor. I'm going to get involved in that trade right there. And that's where they start to sell the markets at the exact time that we're thinking, well, the market's gone a long way. We understand the psyche of the person that's made money. We understand the way the markets move. And we think, well, the market's going to pull back somewhat. So then we become a buyer in these areas here. And that's sure enough, that's what you can see. Going back to this trade right now. So what do we want to be doing with the Franc Yen? Since we're on it, well, we can see that the big momentum move was to the downside. We've had a little bit of a pullback here. And now we want to be taking a trade in the direction of the trend. The overall trend here is to the downside. You can see that, right? And if we were to put in a trend line, hello. Let's put in a trend line here. What's going on? Ooh. The market's reacted to this, right? So it's come up here once, twice, 3 times. The market's pulling back to that trend line. So we don't actually have this trade on right now, but as soon as I'm done with this webinar, I'm going to become a seller of this market. And am I looking for the market to come down all the way to these lows over here, 107.60? Am I looking for the market to do that? No, absolutely not. All I need is a little bit of a reaction. I don't care if the market then pushes all the way to the upside because I don't need that to make me money. So I'm going to become a seller of the market here. And I'm going to be looking to take profit at this level here. A very, very, very small move. If you look at these moves here, this massive down move here, this massive up move there, we're well aware that the market is completely capable of a little short-term move, a little reaction from this area here to this area there. 130 pip move, high probability, from our perspective, low risk trade. We're going to become a seller from here. Now, I'm pretty sure on our next webinar in 2 weeks' time, okay, because that's our new schedule. We'll be doing these webinars every 2 weeks. In 2 weeks' time, we will see that the markets will have touched 111.02. Hopefully. It definitely will do it most of the time. So, okay, moving on. Euro Aussie. So we've seen a massive, massive surge to the upside in the euro. So we can see a lot of strength in the euro. Why? Because of the French elections last week. Came out relatively positive. It was what was expected, but positive in the sense that the candidate that is least likely to pull France out of the European Union and call another referendum was a person that seems to be ahead at the moment. So that's positive for the euro, and the traders really like that. So at the moment, what do we want to do? We want to be buying the markets, okay? Because not only do we have a fundamental reason for being involved in this trade, we also have a technical reason. We can see that the trend here is to the upside. We can see that the market has broken out of a very, very strong trend line here. So daily trend lines, hit it once, twice, came back to it, blasted through it. So the market's broken through that. So we want to be buyers of the market. We're going to start buying the market if it can come down to this area here at the 1.4304. If we get the market to come down to there, all right, we're going to buy, and we'll be looking for a profit target of the 1.45220 area. And then if the market pulls back a little bit more, we'll be happy to buy from this area here as well, the 1.4131. And if it pulls back even more, we'll be happy to become a buyer at the 1.3904. The only caveat to that is that if we start to get a bit of a shift in the fundamental data, okay, so if we see that the French elections, for example, aren't really going the way that we would like them to go and wouldn't be positive for the euro, then that could cause a move in this particular pair in the opposite direction. But if we look at the price action here, you can see that the market ebbs and flows. The natural state of the market is to move up to a level, move through a level, then it pulls back, comes up, comes down, comes up, comes down. And the reason that I have so much confidence in this particular approach, this way of trading, and this has become our primary way of trading, okay, the reason for that is that we've got a hell of a lot of statistics, both forward and back testing, okay, and here's the exciting part. We've got statistics of taking trades in the opposite direction to the trend. What that means is, over the past year or so, we've been trading this approach, right? This is the way, and that's live trading, okay? So over the past year, we've been trading this approach. But what I did recently is I went back over the past year's results, and I flipped all of the trades on their head. So I know what I did last year. I made money last year, which is fantastic by understanding the trades. But what I said was, what if I was stupid? What if I was an idiot and I ignored all of the technical reasons for being in a trade? I ignored all the fundamental reasons. I just went with my gut and I took trades in the opposite direction to the way that the markets were moving. What would happen to my account? Now, it was very interesting. So although I didn't make anywhere near as much money, okay, as I did from taking it in the direction of the trade, here's what's interesting. I didn't lose a lot. And you may sit there and say, well, how can you not lose a lot of money? If you've made money trading this strategy in a particular direction, and then you flip it on its head and you take the opposite sides of the trade, how can you not lose money? Because actually, shouldn't it kind of like one cancel out the other? So you would have lost as much as you would have made. Oh, no. Because of the way that we structure our entries, okay, and the way that we take our trades enables us to, even though we have a negative risk reward, our strike rate is so high that taking the other side of the trade, remember, I'm not saying that I'm going to, by taking the other side of the trade, what I mean is that if I'm looking to buy here, I would sell here. Now, it doesn't mean that if the market comes up to that level, I'll get out of it, because that's not where my stop loss is. I've got a bit of a negative risk reward on my hands because I understand how trading works. So what happened was, in some pairs, we lost a little bit. Some pairs were break even, and others, curiously, actually made money. Okay, so that's why I have so much confidence in this particular approach to trading. And I urge you to take a look at it. Because even if you're wrong, even if you're stupid, and I'm not saying anybody here is stupid, by the way, but even if you were, you would still be able to make money trading this approach. Okay? All right, we're actually coming towards the end of our webinar here. Time flies when you're having fun. So apologies we haven't managed to get through all of the pairs here, but I think you get the idea as to how we're going about analyzing the markets. Hopefully you got some good value here. Hopefully you got a good understanding of the way that the markets work. And what I'll do now is just open up the floor for any questions that you may have. Okay, and if not, then obviously we'll wrap it up here and we will get on with our long bank holiday weekend Monday. So it's bank holiday Monday here. And look forward to the week in the markets, which looks like it's going to be a stellar week in the markets where we're going to be able to make a lot of profit, which is always good. You are most welcome, Jax. Most welcome indeed. So are there any questions on this approach to trading, on any of the pairs there? Obviously, we haven't covered any of the pairs here, but are there any in particular that you would have liked me to have gone through that I can quickly skip across to that pair and do a bit of analysis for you? Or is it just the fact that I've presented this so well, so brilliantly that you have no questions whatsoever? You just sat there in awe of the fact or of the way that we trade and the way that we've delivered this webinar. That's fine too. I understand. Thank you very much. Okay, fantastic. If that's the case, then I will say thank you to FX Streets for putting on these webinars. They obviously they're a great service to everybody that watches them. All right, you get a lot of value, not just from myself, but I'm sure there are other fantastic presenters on here that are giving you their trade ideas, trade strategies, and things like that. So FX Street, thank you so much as always. Thank you everybody for being here this morning. I know it's a bank holiday, so you would have gotten up very, very early to be here. I appreciate that. I know that it's your time. And I will say I look forward to seeing you on our next webinar. Our next webinar isn't going to be next week. By the way, the next webinar is going to be the week after that, okay? So keep your eyes peeled. If you've got any questions for me whatsoever, please feel free to drop us an email at support@traderscorner-online.com. That's support@traderscorner-online.com. Don't worry, even though it sounds like it's a generic email address, I do read each and every single one of the emails, and I'll be happy enough to reply to you. Okay, so thanks a lot. Have a wonderful day, and I look forward to speaking to you all very, very soon. Take care now, and good trading.